Good day, everyone. I am Zara Sungod-Rizak, and I'm going to discuss the financial ratio analysis under sa capital and financial management in agribusiness. So, ratio analysis involves method of calculating and interpreting financial ratios to analyze and monitor a firm performance. It is not only important that you are familiar with the formulas or you memorize the formulas and you know how to compute for these formulas. It's more important that you know how to interpret the result of this ratio for you to able to analyze and monitor affirmative performance. Just like sa isang company, if there's a problem, nakikita yan sa ratio analysis. For example, may kakayahan ba yung company na magbayad ng utang or nagde-default na ba siya sa payments niya? So nakikita yan sa ratios niya. Is is this company profitable or not? So, nakikita rin yan sa ratios niya. Financial ratios involve the use of numerical values taken from both income statement and balance sheet. That's why it is very important to us to become familiar with the statement of operation that includes sales revenue, gross profit, operating profit, net income for earning available for common shareholders. So, depende sa type ng organization and signature of the business, yung chart of accounts. So we have five major of financial ratio. We have liquidity, activity, profitability ratios, market ratios, and stability ratios. So liquidity ratios attempt to measure a company's ability to meet into short-term obligation. So sa liquidity ratio is here are also known as solvency ratios. When we say liquid, they were talking about cash. So, meron bang enough na cash yung company para bayaran yung kanyang mga current obligation? Is the company solve it? Madali bang i-convert yung mga current asset ng company into cash? So there are two liquidity ratios under it. We have the current ratio and quick ratio. For current ratio, it includes your current assets. So what are current assets? That includes your cash, marketable securities, account receivables, inventories, and other prepayments. Sa quick ratio naman, also known as asset desk, whereas for your quick ratio, you include inventory in the competition, so only cash, marketable securities, account receivables, and other current asset for except for your inventory. The second is the activity ratio. Activity ratio measure how efficiency the company manage its asset. So, sa activity ratios naman is also known as working capital ratio or efficiency analysis or efficiency ratios. It answers how efficient is the company in using its asset to generate sales for the company. It also talk about the speed kung gaano kabilis ang company na mangolek ng kanyang mga pautang, gaano kabilis din na magbayad naman ang company ng kanyang pinagkakautangan, gaano kabilis or kabagal ang company na mag-convert ng kanyang mga inventories from the time na ito ay binili as a raw material hanggang sa maging work in progress, hanggang sa maging finished good, hanggang sa ibenta siya, hanggang sa maging pera. So the next is stability ratios. Stability ratios, the deposition of a firm, indicates the amount of other people being used to generate profits. So stability ratio measure the ability of company to pay its long-term obligation. Kung ang liquidity ratio, mini-measure niya kung gaano kagaling ang isang company na magbayad ng kanyang mga current obligation. Ang stability naman, it measure yung kakayahan ng isang company na magbayad ng kanyang long-term obligation, those loans and debts that are payable after a year. The next is profitability ratios. It can be used to assess a company uh, ability to control expenses and convert sales into profits. Profitability ratios is isa sa pinaka-popular na ratio. Of course, the profitability ratios as well as those inventor in a company and management, they are mainly concerned in profitability both in the short run and long run. For creditors naman, mas after nila dun sa liquidity into ratio, ang stability ratio. Because they would like to if if may kakayahan yung company na bayaran sila sa kanilang utang. So the last is the market ratio. Market ratio relate the firm make value as a measure by its current share price to certain accounting value. Market ratio is used to measure how valuable a company is. These ratios are usually used by external stockholders such as inventors market analysis, but can also be used in internal management to monitor value per company share. That's all. Thank you.